All right, good morning. Good morning, good evening, good afternoon. Okay, so today we're going to talk about psychology and a little bit on money management. How most people, when they're trading, after a certain point, they start to feel like, oh, like I have so much bad luck when it comes to trading, and then all the pointing happens. Okay, saying that I need to switch brokers, I need an ECN, basically once failures come in, the pointing begins. That it's not me, it's this, it's not that, it's because of this, I'm having a bad day, having a bad week, whatever it may be. The excuses begin from there. So we want to touch base on psychology for the first part when it comes to the trader's mind of how the traders react and stuff like that. One of the things that traders get into, I don't know if you guys have seen any of my previous psychological webinars before, but trading has a particular cycle that everyone gets into. The cycle begins as you get into Forex due to some friend or relative or somebody gets you into it, and you see potential of high profits. Okay, that's how you get into Forex. That's how everybody gets in. Either it's someone who introduces you, whether it's a company who tells you it's super easy, just follow my buy and sell arrows, or it's some money manager that says, dude, invest in Forex. I can totally manage your account and give you 200% per month or per week. Um, so there's high amounts of rewards that gets everybody interested into Forex as they begin. And that's when they start getting in the beginning. And once they start joining and they start getting their own hands wet, they actually start doing well in the beginning. You know, their demos or their live accounts start doing quite well. Okay. Now, as they're doing quite well in this entire process, they start to over leverage, okay, increase lot sizes, and then blow the account. Okay, so that's phase one, is poor money management. Okay, then phase two happens is once you fail, most people at that point stop and think. Others will just think that, oh, I actually didn't fail. I know what went wrong. I just over leveraged. Otherwise, I was doing just fine. And they start again and they blow up again. Okay. So phase two comes in when it's like, okay, I'm doing something wrong. Let's tear apart the internet and learn everything that we can. Okay, every strategy, every system. That's when you start studying every possible thing on Forex. If there's a website that has the word Forex in it, you're reading it. There's a book that says Forex, you're reading it. There's a system that says Forex, you're buying it. You're doing every possible thing in your power to do with learning Forex, but you stopped trading Forex at that moment. Okay? The application has slowed down because now you're on this hunt for the magic ball that will give you 100% profits every single day, every single minute, every single hour. Okay? So after the hunt has begun, you come to a realization that there is no such thing. Okay? It's just not happening. You know that in the back of your head, but you're still hopping strategies. You're still hopping from one thing to the next, to the next thing, to the next. It's a never-ending movement because the moment you have one loss, you cannot bear it and you move on. Okay, we'll come to that point why that happens. Then comes phase three, is when you go back to the very basics once again of how you first started. Oh, looks like the markets are going up, so I'm gonna buy. Okay, or looks like the markets are going down, I'm gonna sell. So when they do this, they started seeing some profits again because this time their money management is in play. So at this phase, the money management is back to normal. Okay, where they're like, okay, they've come to this conclusion in their mind that, okay, I need to calm down and I need to stop expecting 100%, per day on my account. Okay, they started looking at Forex as an investment. Okay, where they're like, okay, I need to aim, if I get 10% a month, that's considered good. They start to go away from what they joined Forex for, and they start to accept what is told to them. Okay, which is like banks give you 2% per year. If you're doing 10% a year, you're good. Okay, so they started looking at it as an investment vehicle. Okay, that's perfectly fine because technically it is an investment vehicle. Okay, so you're looking at it in that sense, and you start to make some profit. Now, as you're starting to make some profit, you still fail. Okay, and that's when the trader cycle dies. Okay, that's when the moments come where people start giving up. People start thinking that, okay, this is just not for me. People start thinking that, okay, there's no way it's going to work. If someone on the other side says it's working for them, you automatically assume, dude, there's no way, you're just bullshitting me. It doesn't work. Okay, so they get to that level where they just absolutely hate Forex. Okay, so you go through this entire cycle of trying, testing, failing, standing up, testing, some profits and then losses and profits and losses to a point where it's like it's a zero-sum game. I'm getting nowhere. I'm just wasting time, and then people give up. Let me explain to you now of what happens in this entire phase. Phase 1. Okay? Phase 1 happens when people start morning joke in there. Phase 1 happens when people started trading and they start making so much profit, they started over leveraging. Okay, obviously we all look at this as greed. Okay, they're like, okay. Phase 2, when they stop and they start to study, it's the inability to think for yourself is where everybody stands in phase 2. So 80% of the market always sits in phase 2. They're not going to get out of it. You will always have 80% of the market always in phase 2, which is looking for the next best thing, the next strategy, the next system, the next guru, mentor, whatever it is. They're looking for the next best thing. So 80% of the market will always be there. Okay? Once you fail, they don't think why I failed. They think this sucks. What else is there out there? Okay? Someone else comes along, hey man, look what I'm doing. I did 400 pips today. Oh, please show me what you're doing. Okay? And then you get diverted. And then a week later, diverted again. A week later, diverted again. So you're getting absolutely no experience under your belt because you keep hopping. Okay? That's where failures happen in phase 2. Phase 3, once you start going back to the basics and you started seeing some profits again, but because you started to realize that I can't no longer do 100% a day that I was expecting, I've come to a realization that I need to decrease my expectations to like 10% a month or 20% a year. Then they started making some profits, but they're seeing that one, it's either not worth it because my account is too small and it looks like chimp change, so there's no point of me doing this. And two, it's just profits and then losses, then profits, then losses, then profits, then losses. It's this never-ending battle. So the failure for phase 3 is risk to reward. I'll get to that right now. Okay? So this whole thing happens. Now, I want every one of you guys in here to first promise me that you guys are going to step out of phase 2 and into phase 3. Okay? Which means stop hopping. Okay? So you guys need to make yourself a promise today that today the day changes where I'm going to actually stop hopping and I'm going to decide what I want to do, what interests me, and I'm going to stick to it, to the bone. Okay? End of story. Then you're going to try and try and try. When there is a failure, you look back and you analyze. You don't look forward and switch systems. You look back and you analyze why it failed. And I'm going to help you with that today. Okay, I'm going to help you with that. Next thing, once no more Easter bunny hopping. Yeah. Next thing. Okay. So when I was telling you guys of phase 2, right? It's like this. Take a look at this. Remember, you guys remember me always telling you one thing, right? Can everyone hear me? Yeah, okay. Yeah, so you guys always remember me telling you guys one thing, and that's for me to make profit, I just need to know what you are doing and stay on top of it. Everyone's heard me say that, right? A gazillion times. Okay? So let's take a look at this. Let's take a look at this. And when you see all the stuff that I'm drawing on my screen, okay, let me get rid of all of it. When we see this, when you come back to when you start coming into phase 2, when you're like, okay, I'm gonna stick to my guns, and I'm gonna be, yes, this is recorded. So I'm gonna stick to my guns, and I'm gonna be like, okay, I know exactly what I'm gonna do. I know where my trading happens, my moving averages, this and that, or whatever system it may be. There's no such thing as a bad system. All systems are good. You just need to know why they're failing. Okay? Okay, I'm going to ask you, there's 31 people in this room. I want to ask each one of you guys, when you trade, how many times has it happened that you've been stopped out and then the trade goes your way? Okay? Okay. So when you think about that, so it's like, that means if you just think, something is stopping you out and then going your way. Let's look at that in detail. Let's look of how a entry is set up. Okay, everyone see this chart? My US dollar Swiss franc chart here? Okay. So you see how the markets have been coming down. We're in a downward moment. Okay? We're in a downward movement. I'm not supposed to be buying, but I'm just for the sake of an example, I'm showing you a buy. Okay, let's wait till your screen loads if you guys are still on Euro USD because I'm on Swiss franc. Okay, let me. Okay, so Daniel, you're saying looks like the broker knows our stop. Okay, well it's not just the brokers. Even I know your stops. I can tell you. I'm going to show you now how I know. I'm going to show you exactly how I know. Okay, ready? I don't know why it's still slow, but okay. So forget the traditional stuff. Everything traditional, forget it. Just make your mind blank, okay? And bring your mind to think to only one thing, that there is a level that you get interested in buying and then you get stopped and then the trade goes in your way. So imagine how that would look. Okay? You want to go long, for example, here. Your stop loss is below your entry. Okay? The blue area is where you enter. You enter for a buy, and the yellow circle I'm drawing is going to be your stop loss below it. So instead of just a moment, it's still loading. Give me a moment, guys. I'm gonna log out and log back in really quickly. Okay, great. Okay, now when you're looking at this, I want you to understand one thing, is that if you're going long, just think you're buying right here. Your stop loss is here. The market does this. It stops you out and then goes long. Okay? Why are you not focusing on this? If this is happening to you guys again and again, why isn't your focus all on this? Okay? Instead of switching strategies again and again, hoping someone else to do the work for you, why don't you just look at your losses and understand what is going on? Okay? So when you look at this, take a look. I'm going to explain to you how this all works. You see how the market's coming down here? Okay, the market comes down, and you see this curve. It's starting to go north. Okay, it's starting to go north. This curve starting to go north entices people, because this, for them, okay, this is possibly my support. I'm going to go long. And what they do is they end up going long here. Okay, the moment it touches, and then they ride it for like 10 pips and they close it because they have no other choice, because they have no clue what they're doing. Okay? Now, what happens is when you see this curve starting to come in, take a look at your indicators. Let me show you. What's going on here in this area when this curve started to happen? Oversold, right? It started to go long. It was oversold, started to go up. Every system, every strategy, whatever it may be, it's telling you long. Okay? That the market wants to go long. And everything starts triggering with buys, including the human eye. When they see it coming down like this and it's starting to turn up, the fear of missing this makes everyone enter because they want to get it at the absolute lowest. Otherwise, they will miss it. Right? That's the logical explanation. I want to get in or I'll freaking miss it. Okay? So they get in. Where do you think their stops are? At the logical level, below their recent lows. Okay? What I'm actually doing is I'm watching this area myself and I'm like, it's going to go long, but just not yet. I wait for these buyers who are getting in to get caught first. Okay? You can sit here and blame your broker. You can sit here and blame banks and hedge funds, but this is what's going on. You wait for these buyers, your initial buyers, to get killed first. Once they are killed, then the market starts to take off. Okay? You always need to understand that concept, because it usually only works like that. All right. Let me show you some other examples. And you'll have this time after time after time. Usually in each swing, I usually go in from the 4 hours, and then I come into the 1 hour to take a look, and I'm like, someone got killed. Okay? You'll see it here as well. Let's put a circle here so you guys can see this. Okay? Let's take a look at the 1 hour of this area. The market is basing. People are looking at this as a support area. The market starts to base here. Okay? As it's basing, it starts to churn. Okay? It starts to churn here and here. Now, as it starts to churn, people start to buy. Okay? Strategies start to tell you that this is your area. If you're not buying now, you're going to lose. You're going to miss it. God forbid you don't make your 100% tomorrow or on this trade. What are you doing? Get on right now. You know? So it's telling you all this information. It's like, hurry, hurry, get in. Not many people get in. Okay, hurry, get in again. Where are your stops? Below this area. You then have your spike to take everything out. And then that's when you have your stronger moves. Okay, you have your blasting moves after that. Okay, only after people get killed, they get started getting taken out, is when you will have a sharper moves. Okay, now this is going against the trend. Let's take a look at going with the trend. Okay, take a look at this area. Okay, people look at this as a support and resistance area from this. They look at it like this. They're like, okay, support and resistance. Sell, 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 sell. Okay. So what happens? Let's take a look at this area. Okay. Let's go down even sharper. Which one was it? Shit. This one was here. 15. Okay, there it is. So what happens? The markets are going long. It gets to a point where it starts to churn here. Okay? The churn happens, you get a bounce here, big red candles come out, something like this, and you're looking at these areas also, and you're like, this is it. Most indicators are saying it's starting to roll over. Okay? As the rollover begins, systems started executing, saying, doo-doo, sell. You know? So that's when the sells happen, and then you have this massive takeout. Okay? Everybody gets stopped, and then the sell proceeds. Okay? So technically, is this area correct to sell? Okay, the market does sell eventually, right? So what happens is because people start to get this fear of, I have no clue, what they do is they keep their stops here. Okay? Why even use stop loss if you're keeping your stop loss there? Okay? So what happens is once they're entering here and they're keeping their stop loss there like 150 or 600 pips away, it's almost like saying, dude, you don't even need a stop loss. You're just lying to yourself. I've seen so many people when they say, oh my God, you're not using stops, that's such a bad thing to do. And they start criticizing and they start making you feel like you're the worst thing available on earth. It's like, you don't use a stop loss? Like, are you serious? And then when you ask them, where do you keep your stops? And it's like, it's 60 pips away. So what's the difference between your stops and mine? Your 60 pip stop loss doesn't mean anything. Okay? So it's the same thing. They're keeping a 60 pip stop loss. Now, let me explain to you why even those people fail. Even though their stops that they're keeping, that God forbid that one day that comes once every 6 years when the market shoots suddenly against me and it wipes out my account because I am over leveraging. Okay? The market won't suddenly shoot up 1,000 pips against you. Remember, the governments are involved in currencies. It's not a corporation. These are not stocks. Okay? Remember that concept. So the market doesn't shoot 1,000 pips against you, and if it does, your account should not blow. If your account is blowing, you are over leveraging, my friend. That's why you have that fear that I have to keep my stops. And when you keep your stops, you keep it at 60. It's like, dude, why do you even keep stops? Okay? So the objective is you keep your stops tight, or you're just lying to yourself. Okay? Now, let me explain to you. When you keep your stops tight, singular pair only. When you're doing batch trading, it's going to be hard to play with stops. Okay. Why am I telling you that keeping your stop loss here is basically death? Can anyone guess? Who knows the answer to this? Why is this bad? This is phase 3, guys. Absolutely, Martin. your risk to reward ratio is bad. Okay? If your potential stop loss now is, let's say, 83 pips, and your potential target is your nearest area, let's say 55 pips, or 60 pips, or even the same amount, 80 something pips, that's a 1:1. Excuses will start flying up in the air saying that, hey, a 1:1 will work if your win ratio is high. Dude, bullshit. Go home, sleep. Stop trading. The reality is, when you have a poor risk to reward ratio, your stops is just as important as your target. If your target is not set before you take your trade and you don't know where your target is, don't trade. Okay? It's as simple as that. Don't openly trade without knowing where you're going, because you're going to lose. Okay? So if you have your target now set, you know your targets now, and it's 80. So if your stop losses are, let's say, 60, your take profits are 60 or even 80, you're like, okay, my risk to reward is 1:1.2. You know, you find some amusement in that. You're like, okay, I'm doing good. The fact is that if you trade like that, there's no point in trading, because that's when phase 3 comes. You're starting to make profit now, but you're giving it all back. Then you make profit, then you give it all back. Then you make profit, you give it all back. It's a zero-sum game. You're not getting anywhere. You will only reach a resolution that Forex does not work. I am quitting. Okay? Now let me tell you something. Let me pull up. Okay. What's an average account size? Let's say the average account size is $1,000. Okay? Okay, the average account size is $1,000. Okay? When you have a stop loss of 80 pips, okay, with your take profits of approximately 80 pips, what lot size would you use? How do you know what is a good amount to risk? What's a good amount to risk? What numbers do you guys know? Can you guys tell me some numbers? What were you guys trained for money management? Aha. 2:1, 5% is too high. 1%, 2%, okay. Okay. So what is 2% of 1,000? Okay. It's $20. Okay. So 2% of 1,000 is $20 that you can risk per trade. Now, if you're doing 80 pips of risk, that means you need to get 80 pips into your $20. Wait, sorry, I did it wrong. 20 divided by 80 gives me 0.25 lots. That's my lot size. Okay, that's technically micro lots now. We're going into micros. You can trade 0.2 or 0.3 micros maximum. Okay? Now, if you make your 80 pips of profit, how much is that? It's $20 worth of profit. Okay? You do this, let's say, 10 times a month. You're able to do this 10 times a month. That should be sufficient with so many pairs and so many days, 20 days to do this. Multiple trades. You only do this 10 times a month. Okay? How much does that put you at? Okay? It puts you at $200 and or 20%. Okay? That's 10 trades, no loss. Okay? Yeah, 20%, it's not bad, right? It's bloody darn good. That's 100% winners, and you're at 20% of profit. Woohoo! Now, bring in some losses into this. Let's say 3 losses come in this. From your 10 trades, 7 are profits, and 3 are losses. Okay? When you have 3 losses, how much is that? 60? How much are you left with your total? $80, right? Oh, $80, sorry. $80 and 8%. So what just happened? You just dropped from 20% to 8% in 3 losses. Do you see that massive difference? You just got killed. Now flip the scenario around. Let's say you know now how to trade. Okay, you know exactly how to trade now, and you're doing now $80. Sorry, your stop losses are 20 pips because you know exactly when to enter and where to keep your stop losses. Your stop losses are 20 pips, and your take profits are 80. Okay, so now when you look at your profits, 7 profits would be still the same, but your losses are how much now? $15? Okay. Now that you have your losses at 15, does this increase your overall profit number? Let me bring in the excitement now. Let me bring in the excitement with these numbers. Remember we were doing 2%? We're no longer at $20 per trade. Or, I mean, we're no longer at 3 micros anymore because our stop losses are 20 now. Because we know where to keep our stops now. Okay? Now the game has changed. How much can you risk now? Your risk is now 1 mini lot. Right? Okay. So for 80 pips, 1 mini lot means $80 of profit, and 7 winners for $80 of profit puts you at how much? $560? Okay. And 3 losses of $20 puts you at $60. So you're telling me now suddenly, just because I improved my risk to reward ratios, I just made 50% on my account? What if I increase my losses? Okay, I do 5 and 5. Okay, 5 profits for $80 puts me at 400, and 5 losses at 20 puts me at 100. I still do 300, which puts me at 30% of my account. Isn't that better than that bloody 8% you were getting and you have to keep your winning ratio up all the time? Okay, so it's not about how many times does your strategy win. You can go to hell with winning. It's not about winning. It's about risk to reward and how many times you're able to get a proper risk to reward. It's all about that if you want to get out of phase 3. Otherwise, you'll make something and you'll give it all back. Okay? So this way, you are actually able to hit numbers upwards of 250% also in a singular month. Okay, you're able to hit numbers like that. The numbers that you first imagined when you started Forex, like, can I do it? This comes back to life if you focus on your entries, on how you enter, where you're going to keep your stops. Does that make sense, guys? How it is phase 2 gets you trapped because no one is thinking of why I'm getting stopped again and again and again. Now that I've explained that to you, you guys are all in phase 3, and phase 3, it's all about risk to reward. It's not about winning and how many winners can I get. Oh, I got 10 out of 10 winners. Well, I don't want to play with that system. You can go home. You're not getting any of my investment. Okay? I want a person who tells me, well, I lose 80% of the time, I win only 20%, but hey, my account balance is increasing. Okay, here's my money. Invest for me. Okay? That is a logical method of trading. Okay? It's the same thing with many things in life. There's no such thing as a big payout in one single go. You have to do so much little things and lose many times before you get that one big payout. Okay? Real estate people will tell you this. They'll have to work really hard for these small houses, and then suddenly they get an offer for one big house. Okay? They might make losses on the smaller ones, but they get that big payout. Okay? So this happens all the time in every walks of life. There's no such thing as big payouts all the freaking time. It doesn't happen because you'll be given back big payouts also. All right. So let's take a look at this area. You see this? The curve happening. The markets are going up. It's starting to curve here. Everyone's like, okay, let's take a look at this. Well, this is my support and resistance area. I am starting to sell here. It's curving. I'm starting to sell. Everyone starts selling here. Okay? And their stops are in this area. Next candle opens, goes straight up, takes out every possible man available. Okay? Any few that's remaining on top or with no stops are still alive. And then it goes. Okay? Now your key objective is how far does it go? Because even if you understand this concept and you're like, okay, you know what, I can't make precision entries, but at least I know my stops are too close. I'm not going to keep my stops there because the brokers are going to kill me. So you use no stops. Fine. Let's say you come to that conclusion. You don't use any stops and you're just hoping, you're crossing your fingers that it goes your way. And it does. Because the chances are you're usually right. But how do you know how far it's going to go? And how do you measure your risk to reward? How can you up your lot size if you don't have a number? Okay? If you're just blindly trading, you're always going to be stuck on micro lots or mini lots. If you don't have a refined number, you're not able to tune it and increase and scale your way up. You guys get what I'm saying? So you need hard evidence of numbers for you to be like, okay, I've been doing this for 2 months now. Things are looking good. I got the hang of this. Let's move it up 0.5 lots. Okay, 5 more mini lots. We move it up. Do you advise to hedge the same pair? No, 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 no. No, I don't advise to hedge the same pair. Why would you hedge? You should know which way you're going. Exactly. Without a stop loss, how do you calculate risk-reward ratio? You can't. You cannot. Your risk is not measured. Even though the market goes in your favor, doesn't matter. Your risk is not measured, and your reward, you have no clue. Because what's happening is you enter somewhere here, and then you're closing anywhere, wherever you're like, oh, I got 10 pips or 20 pips. That's it. Looks like it's turning around. That's what everybody says. Looks like it's turning around. Close. There is no logical exit. Looks like it's halting. And then they started looking for reasons, and they're like, oh yeah, this makes sense. That's why it's halting. This makes sense. That's why it's halting. Well, obviously it's halting because something makes sense, but what was your original plan? Okay? Yes, you close when the fear appears. Absolutely. Absolutely. Joginder, you say, but you're hoping to let it go too far and don't want to close. Yeah, many times what happens is people are thinking that, okay, I'm gonna ride this. Okay, and they ride it. And what happens is 50% of the time they make the money, and the other 50% the market comes back at them and they're like, crap, it didn't work. Okay, no plan. No plan. It just comes right back at them, and they close in a small, either break even or in a small profit. That puts a fear in them that next time they're in a trade, they take what they can get. Okay? And everybody's answer to that is, hey, some profit is better than a loss. Okay? That is the typical answer that comes out of every trader's mouth. It's better than nothing, or it's better than a loss. Yeah, why not? Doesn't mean anything. Why are you even trading? You know? So you want to analyze all of that stuff and always be on top of how you're trading, because that makes the ultimate difference. Okay? Now, you remember the US dollar Swiss franc trade I showed you guys where, um, let me show you here on the 4 hours where I was like, okay, everyone sees this curve and then they get stopped out here and then we're interested in buying afterwards. Okay? Because that's when the move actually gets some energy. Because now the bigger players are like, okay, all the little players are out, let's ride. Okay? Let me show you what's happening with this right now. Precision entry. I was more interested in getting in after this buy. Now, this doesn't tell you that it's a buy area. Of course not. You're in a downtrend. This is a sell area. This whole area is going to be a sell area. You're not looking to buy whatsoever. Okay? But I just wanted to show you guys for a sake of an example that this, after a move like this and everyone gets stopped out, that's when the action takes over. Okay? Nathan, what is reasonable risk to reward? Well, imagine this way. If you trade the higher time frames, what is your reward? It's big, right? Your reward is big, right? Let's say you're trading on a higher time frame. Yeah, you're looking at anywhere between 100 to 500 pips in that range. Stick to those numbers, but when it comes time to enter, scroll down to your smaller time frame and enter, and get your stops small as possible. But you ride the big wave. Practice doing that. And the way you can decrease your stop loss and increase your take profits, that's good. And I'm not saying every time keep decreasing your stop loss till you reach like 2 pip stop loss. No. Keep it steady. Pick a number, keep it steady, and make sure you can get that number. Okay, and then you work your way from there. Okay, Irma Linda, that's very good. That's very good. You're looking at monthly, daily, and entry on 1 hour. That's excellent. That will give you very good risk to reward just by understanding that concept. I'm not even thinking about where you're keeping your stops, but just looking at that, your stops are based on the 1 hour, and your take profits should probably be based on daily and monthly. So you should be fine as long as they're all aligned together. Okay? So, before we end the conference room, does this thing make sense to everybody? Does everyone understand what we're doing and how each of us fall into these three phases? Okay. I'm pretty sure all of you guys in this conference room are no longer in phase one. Everyone's in phase two or phase three. Okay. So you guys should be coming out of phase two now, which means no more hopping strategies. It's no point because you're gonna get stuck at the same thing again. There's no such thing as a perfect strategy. It just does not happen. Because remember, a perfect strategy is what? More wins, right? That's not your objective. Remember, that is not your objective. Your objective is not more wins than losers, because that means nothing to you. That means you're going to lose in phase three if that happens. Okay? So if your strategy is doing lots more wins than losses, and that's how you're surviving, then you will get stuck on phase three. Well, correlation is always in favor. Okay? You can always find pairs are correlating. Doesn't mean they have to be correlating for the longest time. It can be correlating for the last 5 hours. That you can look at that as correlation as well. Ermelinda, absolutely. The wins are an ego booster, but they do not help grow your account. That's really well said. Okay. So it's the ability to be okay with your losses coming in with the smaller losses and letting you take the bigger wins. It's that's going to keep you alive and going. Okay. All right, guys. So make sure whatever you're doing now, none of you guys are gonna be in phase two anymore after today. Yeah, Manuel will get the next webinars on Urban Forex ready, so we'll list them there. Once we list them, everybody will be notified. Okay. So promise yourself today that after today, I will no longer be in phase two. I will work with phase three. Phase four, you're out of the circle. You're out of the circle. You're no longer in that loophole. You're now with the upper 5% or upper 2%. Okay. Emma, this video will be posted on our website. It depends on Chile. He helps us with the videos. He's helped us last time too. So thanks to Chile. He's been a great help. And whenever you guys get a chance, also thank him from your side too. He's been recording our videos on his own time and behalf, and he's helping us upload. So, can you explain what the Forex Watchers training videos are? Do you teach pro trading strategies only there? No, no, no. The Forex Watchers, everything in Forex Watchers is a whole new level of trading. Okay. We go with the flow of the market. We go with precision entries. We go with understanding how far the market will go, increasing our risk to rewards. It's a whole new level of. It's more of a advanced trading area. It's a lot of fun, and we simplify it as much as we can so everyone can make use of it. So if you guys are interested in Forex Watchers, the offer is still open. You guys can always just go on to forexwatchers.com. get in touch with us and request for a promotion and let them know you're from Urban Forex. Yep, and yeah, Dan is part of it. Joginder is also part of it. So yeah. Yes, Giovanni is part of it too, yes. I didn't see you there, Giovanni. So basically, after we learn from it, we can be well off on our own. Absolutely, absolutely. What it's the thing. It's dependency that needs to be removed. Okay, it's the ability for you to see the markets in your own vision and trade, and remove dependency on systems, methods, and stuff like that. We don't do a free session, Emerlinda, but because you won't understand once you just join in just like that for a free session, it'll be confusing. But you'll have to join in and watch the recordings, or maybe join in for a month rather than the 3-month program, which has access to the live conference, but stuff like that. But okay, Daniel Ho. The program is aimed for 3 months. We do intensive training for approximately that time. It can take a little bit longer, or for some people less. Okay, it all depends on. It takes 1 month to 2 months for learning experience, and then 1 month for application. Because we don't do what the rest of the mentors do, where we teach the people and say, okay, goodbye now, good luck. No, we don't do that. We actually teach and we're like, okay, apply it and see where you fail, and then come back to me. So we're actually there back and forth. Okay. Yeah, yes, we do assign homework. I don't know if you guys hate homework, then there is going to be homework there from time to time. No, it's not learning Forex from the scratch. This is more advanced trading. It's basically removing everything from your mind, from whatever you've learned on Forex, and getting in with a fresh start. Okay, but it's not. I'm not going to explain basics. Okay, we go over some basics only if needed, but we go straight into advanced techniques. All right, guys. So this is we have gone 5 minutes over the webinar now, so we're gonna have to close the webinar now. If there's any questions about Forex watches, contact them there. They will help you out. And I look forward to seeing you guys on the next webinar on Urban Forex. Should be in a week's time or so. Take care, guys. Have a very good night and a good weekend.